Let's catch up with this story in Hong Kong. The pensioner who blocked the world's largest IPO of a real estate investment trust has until January the 12th to launch a final appeal. The Hong Kong government says if no appeal is made, then a listing could take place within a month. So where will this story end, and where does this leave REIT IPOs? With us now, Peter Churchouse, Director at Lim Advisors, who comes to us live from Hong Kong. Peter, nice to have you with us on the programme here in Europe. So this is quite a story. The IPO just seems to be stalled. As far as you know, where do we go from here?
Well, as you've said, the appeal process and a due legal process will take place. This old lady hasn't yet determined whether she will lodge an appeal to the Court of Final Appeal, but she's got plenty of time to do that until January the 12th. If she elects to do so, it's unclear how long it will take the court to hear this appeal. One suspects it'll be quite quick, but one is not really too sure. So at this stage, it's really still very much in the air.
I mean, the market in Europe may have trouble understanding on what grounds the pensioner has blocked this REIT. This is a $3 billion investment vehicle, and yet it just seems a legal challenge from this pensioner has derailed the whole IPO timetable. What is her problem with what's being done?
Well, the background to this issue is that these retail and car parking facilities are actually held by the government in its public housing estates all across Hong Kong. Nearly 50% of the population in Hong Kong live in public housing estates, and they're served by these retail facilities inside the estates. The idea here is that the government wants to privatize these retail and car parking facilities to make more efficient use of them and so on. And of course, they are actually owned by the government. So there is some review here which suggests that perhaps the Housing Authority does not actually have the right to sell these facilities in the private market like this. And this is what the basis of the challenge is all about. That's the right of the government to sell these facilities from out of the government into the private sector.
Peter, to what extent is this a test case for REITs globally? You've been around the property industry for a lot of your working career in the financial community. How big a deal is this going to be for property investing?
I think it's not such a big deal for property investing as such, because there is a particular circumstance here. These assets are publicly owned at the present moment. They're not private assets. Most real estate investment trusts around the world are made up of assets that are privately owned either by banks, private companies, individuals, or whatever, not public assets. What it does, I think, is bring into question a little bit more the ability of governments to do privatizations per se of whatever those assets might be. There might be transport, there might be any other kinds of facilities. So I think what we're looking at in this part of the world is questioning the ability of governments to privatize publicly held assets, no matter what sector they're in, not just real estate.
And this is fascinating for us here in Europe, where we have governments that are running deficits, that are putting in jeopardy their membership of this exclusive Eurozone club. Now, the Hong Kong government, I believe, was also looking to take the money raised here and fill in some holes it has in its finances.
That's exactly right, and you've seen in Italy, I believe, also that there was quite a lot of motivation on the part of the public sector to go into the REIT business, if you like, of its publicly held real estate assets for the same reason, to shore up its own public sector finances, not just to make more efficient use of these assets, but also there are fiscal issues surrounding this. This is very much the case here. Hong Kong has been running, the government has been running a budget deficit now for a number of years. That looks likely to continue for several years. So there is certainly some pressure here from a fiscal point of view as far as the government is concerned.
Peter, it's Bill Hubbard. With the question that Jeff just asked, we have here in the UK, Gordon Brown has been mentioning REITs for the past 18 months. Nothing has really gone further than just the explanation. But I know from his standpoint, especially with the finances, this would be extremely profitable for the Treasury. Is there anything really that we could be looking at here in the UK or in the Eurozone that could affect really this project, this idea going forward?
Well, as we know, in the UK right now, there is a paper that's being discussed and debated publicly in the UK about the whole idea of issuing REITs. The biggest stumbling block I think Mr. Gordon Brown has about this is that in most
Yeah, well, we seem to be having a problem with our connection to Hong Kong. I don't know if being based here in the UK it was anything that we may have said about the state of UK finances. We will see if we can get back our picture with Peter Churchouse, and if he comes back up, we want to continue our discussion here. We still need to talk a little bit about the prospect for Asian property, I think, because Hong Kong has been on quite some bounce back.
I think do we have the...
Yeah, we can bring Peter back in now until we've got our link back up.
Let's see what his answer to this is. Yeah. Peter, again, the question was Gordon Brown, the real estate investment trust market here in the UK, and basically you were in a very, very interesting answer. So if we could just continue now, because I think we can get you back.
Yeah, that's right. I think the UK has been looking at real estate trusts for many, many years. And there's a paper on the table now that is out and being reviewed in the public domain. I think Gordon Brown's main problem with real estate trusts is a tax angle. In most jurisdictions around the world, real estate trusts attract a tax break for investors, which is actually quite beneficial, of course, if you're an investor. And of course, Mr. Brown, I don't think is really wanting to give up any tax breaks like this. So I think that's probably the biggest angle. Apart from that, I think there's every reason to expect that the UK will be likely to introduce real estate investment trusts. They're in very strong demand by the investing public. They're a great vehicle for pension funds, insurance funds, and so on. And they seem to be very attractive in most parts of the world. So I suspect it will happen in the UK if we can get around this tax problem.
Peter, looking at this, and I remember trading real estate investment trust back in the States in the mid-'70s, and it really was an incredible boom for places like Atlanta and Dallas and Phoenix that were just going through a massive growth period. Now, is this important in reference to interest rates, or really does it make any difference whether interest rates are 1, 3, 5, or 7% on how well these are accepted both by the investment public and, as you just said, pension funds, etc.?
Well, they are. You're right to raise the point about interest rates. Real estate investment trusts are high dividend yielding kind of instruments. And in a way, the investment community looks at them as something that's halfway between a stock and a bond. They have very low volatility characteristics. They have very dependable and reliable earnings characteristics. And REITs are required to pay out 90 or 100% of their net profits as dividends to shareholders. So they tend to be quite high-yielding instruments, and therefore investors look at them almost as a proxy for the bond market, and also they look at them in terms of saying, well, I can get 6 or 7% yield on a REIT. I'm getting less than 1% on my money in the bank. So people look at them as a proxy for other forms of investment that are interest-bearing, if you like, and they do tend to give much higher yields, dividend yields to investors than other forms of bank deposits and many other kinds of securities. So they are attractive from that point of view.
Peter, again, the continuation here, as you just mentioned about it being, quote, almost a bond investment. I mean, as we've seen here in the UK in the past 6 months, we've had pension funds, especially knowing they're going to have to conform to new regulations in the new year, actually buy 16 billion more gilts than they have equities. Now, would this then force maybe some governmental tax changes here in the UK to make this a far more viable vehicle for investment?
I think it will do. I think, as we said earlier, the tax issue is probably the biggest issue to overcome. I think the market wants these things. I think the suppliers of property, the owners of property, are very happy to think about injecting their property into REITs, as we've seen in France, we're seeing in Japan, we've seen in Australia and America. So I think there is good supply of properties that can go into these things. It's really whether they're prepared to provide these tax breaks. The tax break is very simple. In a company, the company pays profits tax, and then typically the shareholder or the investor pays also income tax on the dividends that he receives from that listed company. In the case of REITs, you only pay tax once, either at the company level or at the shareholder level on your dividends. So there is a tax give up here as far as the government is concerned. So I think there will be pressure on Gordon Brown to come to some accommodation on this, as we've seen in other markets in Europe and France and also in Italy.
Peter, just before we wrap up with you, it's been a tremendous last 6 months or so if you've been invested in Hong Kong property stocks, and we'll roll through some charts just to show the audience here. The feeling seems to be Hong Kong's back on track and the property market's just going up. What do you get the sense of on the ground?
Oh, absolutely, Jeff. The property here fell 65 to 70% from its highs in '97. It bottomed out in 2003, and we've now seen something like about a 40 to 45% increase in residential property prices over the last 15 or 18 months. We've seen prime office rentals up 60 to 70% in the prime districts in Hong Kong. There is no suggestion here that this is going to turn down at all. We're looking at quite tight supply of office property over the next 2 years, quite tight supply of residential property, and with interest rates very low, the economy bubbling along very nicely, unemployment coming down, there's every reason to think that property prices will continue an upward trend for the next 2 or 3 years. Perhaps not at the same pace we've seen in the last 12 months or so, but certainly upwards, not downwards. So I think the market is reflecting that, and we're seeing property stocks doing very well indeed.
The risk at the margin is what, Peter?
The risk at the margin, I think, is really macro. It's not so much local. The risk is perhaps, as we all worry, a dollar collapse, which leads to a rapid rise in interest rates around the world, particularly US dollar interest rates, which would have a big impact here in Hong Kong because the currency is pegged to the US dollar, and interest rates in Hong Kong reflect very closely interest rates in the US. So that's a big background worry here. As far as the domestic economy is concerned, clearly a major slowdown on China might have a big impact, but we're not expecting that. China's bubbling along at about 8 to 9% real growth at the moment. So we see the risks really coming from external sources more than internal sources.
Peter, very good to have your time. Thank you for joining us out of Hong Kong. Peter Churchouse, Director at Lim Advisors.